During this lecture I'm going to be introducing time and price cycles to you. Time cycles are a topic which I've discussed in great detail already prior on my public YouTube channel. However, the topic of price cycles is something which I've never mentioned before and no one else has neither. I hope that you're excited for this lecture because I have much to share with you. Welcome to this new lecture. During this lecture we're going to be discussing the main topic, which is that market swings are orchestrated. Price is not delivered randomly, but by HYPOTHETICAL. This is the interbank price delivery algorithm. Every single price swing that you see across the board taking place, whether it be in Forex, crypto, commodities or index futures, is always engineered in advance. Meaning there's always a plan in play. Our job as traders is to follow along with the plans as they are being established and recognize what these plans actually are. HYPOTHETICAL always refers back to time-based liquidity pools. Time-based liquidity pools are algorithmic reference points, meaning the algorithms that get utilized to deliver price on a daily basis need to know what reference points they can utilize to actually deliver the prices. Therefore, they look back into the past to see where time-based liquidity pools are, which they can refer to in the future. Algorithmic reference points are important during the current time cycle, but also during the next time cycle. That is what you will learn during this lecture. So a question which I get asked quite a lot is, what are the highest probability trade setups? This is a question every single new trader or trader that has been trading for quite some time asks themselves. When it comes to answering this question, I would like to think about the following. First of all, you need to understand exactly what leads to every single key market reversal. Once you know exactly what leads to each single key market reversals, the next step is knowing, okay, how do I know that this is the real reversal? Well, in order to be able to anticipate when the real reversal is in, what I would like to think about is the following. Let's say that you come to the charts and it's a new week or a new day. Let's say that you make an analysis for that new week or new day and you outline for yourself, okay, I'm looking for price to do the following during this window of time. And when price is actually doing what you're anticipating during that window of time, you see that you're aligned with HYPOTHETICAL. You're aligned with the algorithms that deliver price. So there is not just one setup that is the highest probability trade setup. And this is something that frustrates me a lot as well when I go online on social media and I see all these people speak about, this is the best trading setup. This right here is the setup that's going to make you consistently profitable, whatever, right? When I see those guys speaking about those things, I'm thinking to myself, but wait a minute. The price pattern that you utilize to get into a trade doesn't mean anything. I don't care about the price pattern that I use. I don't even use price patterns to get into trades. It might look like I'm using price patterns, but all that I'm referring to is time on the x-axis and price on the y-axis. And when they align in the form of time and price cycles, I know exactly what's likely going to happen next. But to come back to the question, what I would like to think about is the following. If you know exactly what you're looking for the upcoming time cycle and you have outlined, I'm looking for the following manipulation cycle to take place, where you're looking for the market to manipulate in a specific way, and you see the market in fact manipulate throughout that time cycle as it's taken place, what is there to think about? What is there to doubt about? You're aligned, and all that you're waiting for is you're waiting for the reversal to be in play. And during this lecture, I'm going to be teaching you exactly what you need to be looking for to confirm exactly for yourself, okay, this is what the current time cycle is going to do, and this is how the price cycle that we're currently in is going to behave. When it comes to bullish high probability trade setups, what I'm always looking for is the following. What I'm looking for is accumulation, manipulation, distribution. This right here does not change. This is AMD power of 3. This right here is the core behind every single market swing. If you do not understand AMD, you will never be able to look at the market from an objective perspective, because you're always going to be chasing price patterns for the sake of chasing price patterns. What I would like to start looking for is the following. When you come to the charts, first of all, look for where is your previous cycle low and where is your previous cycle high. If you do not understand what these things are yet, don't worry, during this lecture I'm going to be explaining to you what they are. But if you know exactly where the previous cycle low is and you're bullish for the day, what you're going to be looking for is you're going to be looking for an open of the current time cycle, a drop lower taking place, where sell-side liquidity, which has been engineered, gets taken out. When that sell-side liquidity of the previous cycle low gets taken out, what you're then looking for is you're looking for the signs of a reversal taking place, so that the market can then expand towards the upside, drawing towards the previous cycle high. Now, a key point which I want to put emphasis on is the fact that this new time cycle opens low. Open low. That right there is something which I want you to just engrave in your mind when you're looking for bullish setups. Look, what the majority of people do is they simply look for a bullish break or a bullish fire gap or whatever other bullish pattern they might utilize to get in sync with a market move. But at the end of the day, that price pattern by itself means nothing. What matters is the time at which it occurs. Once you are able to understand the time at which the underlying order flow is beginning to change from sell program to buy program, that is when you're able to anticipate, okay, we're likely now going to see bullish order flow step in. And once you know that the low is in and you know that we have seen a change in the state of delivery, from that moment in time, you're able to confidently say, hey, at this moment in time, you can use any discount rate to get in sync with that expansion which is going to take place towards the upside. When it comes to a bullish example of what I've just outlined, what I will share with you is the following. Here you can see the 1 minute chart of Nasdaq, and what I would like to see is that I've outlined the time cycles of 8:30 AM to 10 AM and 10 AM to 11:30 AM. Now, on my public YouTube channel, you can see the market maker buy model showcase, which I've shared prior to the release of this lecture, in which you can actually see me execute this trade live, where you can see me enter and manage to trade accordingly as the market is expanding into my favor. But when it comes to the underlying logic behind that trade, what I would like to start paying attention to is the following. What I would like to start paying attention to is the fact that first of all, we can see that the previous cycle high was up here. This is the high of the time cycle between 8:30 to 10 AM. We'll get into this later and more in depth. However, what I would like to see is that at 10 o'clock, a new time cycle opens up. If you're already familiar with my 90-minute cycles, this should already click. If you're not, don't worry, I will explain it later during this lecture. However, what you can see is that exactly at 10 o'clock, we open low, taking out the previous cycle low, taking out sell-side liquidity, which was engineered throughout the previous cycle low. We then see the market reverse and show the signs of reverse taking place. And where is the market drawn towards? It is drawn towards the previous cycle high because that is the key time-based liquidity pool where buy-side liquidity has been engineered. So what I'm looking for all the time is I'm looking for purge and reverts, because when you start to look for purge and reverts, you're able to look at the charts from the perspective of, okay, retail would be looking at this large down close candle right here. They would be thinking to themselves, damn, we should go market short. The market is going to roll over. It's going to continue dumping. However, if you understand the smart money paradigm, you understand that retail is being trapped right here. And retail is being trapped in particular below that previous cycle low. So below that low, what's happening is that retail is chasing shorts while smart money, their algorithms, their high frequency trading algorithms are doing one thing. And what they're doing is they're firing in long orders. And as the market then eventually forms the low and begins expanding towards the upside, you begin to see that every single discount array begins to get utilized as support the price. Pay attention, for example, to this imbalance right here, or pay attention to this high right here, which we displaced through with this imbalance. Pay attention to this imbalance right here where time distortion occurred. So what I would like to see is that it's not so much, oh, we formed those imbalances and therefore we're now going to see the market expand towards the upside. No, that is not what I'm sharing with you. What I'm sharing with you is the timing element. And when I outline what price cycles are later during this lecture, that will be a major light bulb moment for many of you. I understand that for some of you, I might already go a bit too quick. I might already go a bit too fast and you're probably like, damn, this is a lot to take in. We're just a few minutes into this lecture. Yes, we are. However, what I would like you to understand is the following. What I would like you to understand is that the reason why it's complicated to you right now is because it's so new to you. You haven't seen this enough times. However, if you go into your own charts and begin to look for these algorithmic signatures, which are time-based, you'll begin to see exactly what IPTA is referring to all the time. And that is where the magic happens, where you begin to train your eyes to see these things again and again and again and again, and there will come a moment in time where it will get boring. And you will come to the charts and you'll think to yourself, yep, it's the exact same logic again. And if you right now are a bit hesitant about doing so, you're maybe a bit on the verge of, okay, should I click away from this lecture? What's this going on about? Whatever. Just look around. If you start to look around and you start paying attention to time cycles, you will see thousands of students of mine who are actively using them on a daily basis and achieving major results with that. Now, that's not me guaranteeing that you are going to be able to replicate those same results. I cannot guarantee your profitability. However, what I can guarantee you is that when you come to the charts, you will never be able to look at them from the same perspective again. Because what I'm outlining to you here doesn't just work on a 1-minute chart of Nasdaq. It works on every single asset class across every single different time frame. It's all fractal. Now, when it comes to bearish high probability trade setups, what I'm always looking for is the following. What I'm always looking for is, again, accumulation, manipulation, and distribution. What you can see is that throughout the new time cycle, what I'm referring to is where's the previous cycle high, where's the previous cycle low. And what I'm looking for is I'm looking for the current time cycle to open up, run higher at first, taking out the previous cycle high, and when that previous cycle high gets taken out, what's occurring there is that retail is being trapped into believing that higher prices are going to be next. As these retail traders are being trapped, smart money is doing again one thing, which is the following. They're firing in their short orders. Why? Because they know that the higher time frame institutional order flow is bearish. Therefore, they understand we're manipulating price higher now to then distribute towards the downside. Now, what's important to note is that the first key sales liquidity pool objective is the previous cycle low, which is the opposing side of liquidity. Why? Because throughout the previous time cycle, there hasn't only been buy side which has been engineered above the previous cycle high. No, there was also a lot of sell side liquidity which was engineered below the previous cycle low. So what you can see is that what I'm doing with you now is I'm literally outlining to you how you can objectify your whole trading approach, where you pay attention to fixed windows of time, pay attention to the highs and lows that form throughout these windows of time, because throughout the next time cycle, you are going to be referring to those highs and lows. That's it. And when you start to blend in specific price elements as well, man, oh man, oh man, a whole new world is going to open up for you. And that is something which I want you to keep in the back of your mind, because that is what I'm guiding you towards. Because I know what type of impact this knowledge has made on my life when I found this out years ago. When we pay attention to a bearish example then, what I would like to see is the following. What I would like to see is that we have 3 time cycles in front of us, where we see 8:30 to 9 AM, 9 AM to 9:30 AM, and we see 9:30 to 10 AM, but the 9:30 to 10 AM is not fully played out, and it doesn't matter. The reason why is due to the following. What I would like to pay attention to is the fact that throughout 8:30 to 9 AM, the market went sideways, consolidated. Notice that buy side liquidity was engineered above this high, and sell side liquidity was engineered below this low. Notice that when we opened up for 9 AM, we saw the market consolidate at first, and we then eventually saw the market reprice in close proximity to that previous 30-minute cycle high, but notice that the market stopped right in advance of it. We then saw the market have this quick sudden drop towards the downside, and we formed a low right in advance of that previous cycle low. So what you can see is that both on the buy side and on the sell side, more liquidity is being engineered. That right there sets the stage for one more manipulation leg. And when that manipulation leg takes place, that is where you're able to anticipate, okay, the next time cycle is going to reprice where? Towards the opposing side of liquidity to where the liquidity was taken out at first. That means that what you can see is that we take out buy side liquidity resting above all of these relative equal highs, form a high right there. So what is 9:30 the next time cycle going to do? It's going to draw towards sell side liquidity next. It's going to attack sell side liquidity. Why? Because we already purged a lot of buy side liquidity. So who's likely going to be targeted next? Sell side liquidity. See the market expand towards the downside heavily, and that right there is the purge and revert on a 30-minute cycle done. So what you can see is that I'm fractalizing the logic with you. And once you start to understand the fractals, you're able to look at the marks from this perspective as well, where you understand, hey, from the bigger fractals, we move down to the smaller fractals. And by aligning ourselves with the bigger fractals and the bigger time cycles, and we align ourselves with the smaller time cycles inside of those bigger time cycles, all of a sudden we're able to see exactly what it is doing, and we're not surprised when it runs higher quickly like this and immediately rejects it. Why? Because it's the only logical thing to do based on purely a time and price perspective. So when it comes to a summary of high probability trade setups, what a high probability trade setup is to me is the following. A high probability trade setup is a setup in which you have outlined throughout the current time cycle what the next time cycle should do. Meaning, let's say that the current time cycle is from 8:30 to 10 a.m. And you outline for yourself, okay, 8:30 to 10 a.m. its high and low are forming approximately in these areas. And I anticipate that we're bullish for the day. We're anticipating higher prices for the day. If that is the case, what we're then anticipating is that the next 90-minute cycle, which begins at 10 a.m., is going to do the following. We're going to be looking for that time cycle to open up, drop towards the downside, and in that drop lower, retail will be trapped in short positions, while smart money is actually going to fulfill their long orders. So what you can see is that I'm already outlining how the next time cycle should deliver. Because when that time cycle indeed opens up, and I see exactly that what I already anticipated prior, there's no surprise to what's going to happen next. Why not? Because I've already outlined exactly in advance what I'm going to be looking for. And as those algorithmic signatures step in play, which are always the same, they do not change. It's always the same reversal sequence which is setting up these market reversals. Once you start to understand that and you see that sequence of events taking place, then all of a sudden you know exactly, all right, this right here is going to be the move. This right here is going to be the highest probability trade setup for the current day or even session. When we pay attention to what that exactly looks like, this is the schematic which I want you to just engrave in your mind. Make a screenshot of the schematic if you want to, print it out, hang it above your bed, whatever you want to do. Have this schematic in your mind. And if you're completely new, you're probably looking at the schematic and you're like, is it really that simple? Is it really that straightforward? Yes, it is. Look, something that a lot of people do nowadays is that they overcomplicate their trading approach. They always try to keep on adding things to their methodology and they always keep on making it harder and harder and harder. But what if I told you that what IPTA is doing based on a time and price perspective is actually very straightforward and very simple? It's not simple to trade, that's not what I'm saying. What is simple is how IPTA is coded. And once you start to decode IPTA and you start to see when and where these algorithmic signatures are going to step in, that is where you're able to see exactly, all right, this is what's likely going to happen next. So engrave these schematics in your mind. Because once you start to understand the concept of time cycles and you start to understand Purge and revert, you're able to see exactly, all right, this right here is now manipulation taking place, and once that manipulation is coming to an end, there's one thing which will have to follow, and that is distribution. Always. So when it comes to time cycles, I want you to start looking at time cycles through the following perspective. The current time cycle always sets the stage for the next time cycle. And when that next time cycle opens up, what we do is we pay attention to the previous cycle high and the previous cycle low to gauge the order flow. This second time cycle then sets the stage for the third time cycle. And we again pay attention to the previous cycle high and the previous cycle low. The reactions to these levels tells us exactly what IPTA is currently doing. Because if we reject those levels and we see the signs of reversal taking place, we know that manipulation is likely occurring so that distribution can take place. Now this is not me saying that you simply see a rejection of a previous cycle high or previous cycle low and there's a trade. No. Because if you have been paying attention to this lecture, if you're paying attention to the details, you will have seen that there's one element which you cannot forget, and that is the higher time frame institutional order flow. What is the higher time frame institutional order flow? Telling to you right now. Now that's a topic which requires a lecture by itself, which I will release in the future. However, for now, it's important to note that you must align yourself with the higher time frame institutional order flow, especially when you're brand new and you're just getting into trading, because else what will happen is that you're simply going to be treating this as any other price pattern and you're not going to be finding the consistency that you so deeply desire. Now, when it comes to a visual example of this, what I want you to look for is the following. When we pay attention to the bearish example which I've shown prior, what you can see is that throughout this first 30-minute cycle from 8:30 am to 9 am, I'm referring to the next 30-minute cycle already because I'm anticipating what that's going to do. When that next 30-minute cycle opens up, I'm going to be outlining the high and low of the previous cycle. So when it comes to the use of time cycles, what I want you to start doing is the following. What I want you to start paying attention to is literally what the current time cycle is doing to anticipate what the next time cycle is likely going to do. Once you start to look at time cycles from this perspective and you start to pay attention to the current cycle is high and low, and you annotate those levels and extend them to the right, when that next time cycle opens, you're then able to anticipate, okay, this is how that next time cycle is likely going to deliver. And when price then reacts off those previous cycle highs and lows, you see exactly the story that IBDA is telling to you. So if you start to look for specific previous cycle highs and previous cycle low rejections or continuations, which are not the topic of this lecture, because I want you to purely focus on Purge and reverts, because in my opinion, Purge and reverts are the only trading approach when it comes to time cycles, which you need to find a lot of setups every single week throughout every single session, because every single session there is an opportunity utilizing this logic. So when we pay attention to a chart example, then we're going to be paying attention to the previous bearish example, and we're going to be looking for how I'm actually using a time cycle logic to anticipate what the next time cycle is likely going to do. So what you can see is that throughout 8:30 to 9 AM, what I'm looking for is this consolidation to continue. A high and low forms. When the next time cycle then opens up at 9 AM, what you can see is that the market goes sideways again, and we come in very close proximity to the high and low. When that final part of the time cycle then takes place and we see the market take out the previous 30-minute cycle high, that's telling me, okay, for the next time cycle, price is going to attack one form of liquidity, which is the opposing side of liquidity, which is sell side. Why? Because we first took out buy side liquidity, so now we're going to refer towards sell side liquidity, since the higher time frame institutional order flow is bearish and we're dissipating lower prices. When it comes to time cycles next, what I want you to start paying attention to is literally the reactions to the previous cycle highs and previous cycle lows. That's the best way that I can summarize time cycles logic for you. Now understand that some of you might be listening to me speak and you might still be asking yourself, okay, alright Zeus, what are the time cycles exactly? So I'm going to be explaining them to you. Let's say that you come to a blank chart. You're probably wondering how to actually look for these time cycles and how to actually utilize this logic. In front of you, you can see a blank chart of Nasdaq and it's a 1-minute chart. What I want you to do is the following. I want you to literally grab your vertical lines and I want you to place them at fixed times. These times don't shift. These times don't change. They're always the same. And these times are in New York time for your info. It's very important that you change your trading view charts to New York time if you want to follow along with my lectures. What you can see is that what I will be doing is I will be plotting vertical lines at 7 AM, at 8:30 AM, at 10 AM, and at 11:30 AM. 7 to 8:30 AM is the first 90-minute cycle of the New York morning session. The second 90-minute cycle is from 8:30 AM to 10 AM, and the third 90-minute cycle is from 10 AM to 11:30 AM. These cycles are the same for every single trading day. They do not change, so there's no need to worry about doing different types of calculations or whatsoever. No, if that refers always to the same previous XH and the same previous XL. So when it comes to time and price cycles in action, I would like to share the execution video with you, which is also publicly available on my YouTube channel, in which you can see the power of this information.
Take me.
Let us now speak about the topic of price cycles. Price cycles are the cycles which I utilize within price to find what IPTA is likely going to do next. Time cycles get utilized to anticipate when. Price cycles get utilized to anticipate where. This is a topic that is not publicly discussed. It's not a topic which anyone else has ever mentioned. And therefore, what I will be sharing with you now is going to be pretty new. And you're going to be thinking to yourself, damn, I need to be cautious with the words which I use because I don't want to put too much out there, since what I'm about to share can put myself actually at quite a big risk, because there's reason why you cannot find any information on price cycles out there. But what a price cycle basically is, in the most simple form possible, is the following. Let's say that we are seeing a swing low form, and we see the market change from sell program to buy program. Let's say that we see that change in state of delivery. From that moment in time that the smart money reversal takes place and the underlying order flow begins to change, what happens is that we change from a bearish price cycle into a bullish price cycle. And when that change occurs and the bullish price cycle begins, IPTA is going to spool through each key level again and again and again, and it's going to utilize those key levels as support on price until it has reached its drawn liquidity, its point B, its terminus point. That is why I always keeping on saying to you, determine A to B and you'll be alright for the rest of your trading career. A to B, that has to be your focus. You need to know the inception point of a price swing, and you need to know where the anticipated terminus of the price swing, which is point B, is going to be. If you are unable to define A to B, and you're right now going into the charts and you're simply just trading for the sake of trading because you just want to test out this new price pattern, or you just want to make ends meet, or you just want to pass this funded challenge or get that funded payout, you're literally gambling. And the reason why is because you're getting chopped up in the middle. What you need to start looking into is what is actually the beginning of a specific price cycle, whether it be bullish or bearish. And once you're able to anticipate and know where they occur from and originate from, that is when you're able to find these high probability trade setups. Because then the next step is knowing the timing element, the when and where. That right there is what your focus has to be on moving forward. And if you go back through this lecture and through all of my previous lectures, which I've been sharing over the course of these past couple of years, you will see exactly what I've hidden in plain sight. Because I've literally gave you the whole blueprint that you can utilize to see IPTA with a level of clarity that's insane. And once you begin to see this, it's going to be shocking at first. You're going to be looking around the room and you're going to be like, damn, like, whew, this is insane. Every single one of my students that's now absolutely crushing it, they're milking out prop firms, or they're running up their own live accounts, or they're actually managing other people their capital, they're all sharing with me when they started to see these things, they were shocked. They were like, no way it's this rigged. Well, let me tell you something, it is this rigged. And you can fight against me all you want, you can try argue against me online, you can try and get into discussions with me. I don't care. Like, I never get into any arguments. And the reason why is because my time on this earth is only limited. I don't have any time for any negative energy, and neither should you. If you do not agree with any of the things which I'm outlining during this lecture or during any of my previous lectures, alright, then we can agree that we disagree and then we can both move on, right? But don't waste any time listening to negative people. That's a lesson which I've learned over these past couple of years. Focus on your own path. Focus on doing that which you know to be the right thing every single day, every single week, and watch the growth take place. And I promise to you right now that if you dive into studying these things on your own charts, which I'm literally sharing with you for free right now here on my public YouTube channel, you'll come back to me in a few months. If you put in honest effort, and you're going to be like, wow. And it's going to be a very awkward feeling because you don't really know whether it's a good feeling to have or a negative feeling, because on one hand it's actually not fair that this system has been created, that it's this rigged. But on the other hand, it's actually very logical that it has been created, because if this system wouldn't exist, the whole global economy wouldn't exist. It would collapse, right? And therefore we need to understand that this system is there for global trade. And once you begin to understand that, you begin to appreciate IPDA more and more as well. And once you begin to understand it that way, you begin to see as well, hey, the fact that this system exists is actually a good thing. Is it fair from a human perspective, where it's the basic foundation that everyone should have equal chances? Yes and no. That's something you can think about for yourself. But in my opinion, you don't need to worry about that. Things are getting harder in the world. Times are getting harder. You don't have to look around a lot to see that in all Western cities, things are getting bad very quickly. Things are going downhill. And all that should be on your mind is how you're able to provide for you and your family, for you and your loved ones. That should be the only thing on your mind right now. And I don't want you to think about, okay, this is an unfair system. IPDA shouldn't exist. All markets should be free. Supply and demand should be the real reason why price goes up and down. Well, be honest with me for a second right here. Yes? If supply and demand was the reason why price is going up and down, how is it possible that I literally provide every single week key levels that I'm going to be looking to trade off, and every single time those key levels get reached, whether it's being during the London session, whether it's during New York AM or during New York PM, there's always the same algorithmic signatures occurring from those key levels at the right times. Of course, the timing is different because it's different sessions, but within the sessions, I have the same time windows for each session. You tell me, how is it possible that that could be random? How is it possible that that right there could be the collective consciousness all deciding to go market short or market long from a specific level? It doesn't take long for you to begin to realize there are higher powers at B which are actually controlling every single market fluctuation. And I'm not too sure if I will let this in this lecture, because I know that this is the type of stuff that is actually dangerous for me, my brand, and for the whole YouTube channel. But I do feel like it's my duty to share this. And the reason why is because I know that this understanding was the missing piece within my trading. And I hope and I know it will be the missing piece in your trading as well. All that I ask you to do is to just go into the charts, investigate, start looking for these things. And once you start to see these things again and again and again at the same times, every single week, every single day, you're going to be amazed. And you're going to be super grateful for the fact that you persevered. I'm not saying it's going to be an easy journey. I'm not going to be saying that, oh, next week you're going to be profitable, even next month. No, some of you might, if you have already been training for a while and you've already mastered yourself and you understand, okay, this is how you can simply follow a trading approach and stick to it and the results will compound. Yes, but some of you might also be completely new. If this is the case, set realistic expectations for yourself. Don't simply think that you're going to go out here because you've watched this lecture and next week when the market opens on Sunday, you're going to be out there just swinging for the fences and you're going to be trading like a king. That won't happen. It takes a lot of time, a lot of practice and a lot of experience. But if you are willing to put in the required time and effort, man oh man, you might have an idea of where you're going towards. You might have an idea of what you're striving to achieve within the upcoming year or the upcoming years. But trust me, where you are thinking of heading, it's not big enough. It's really not big enough. Because once you start to see the results coming in, and you start to level up, you begin to realize, hey, the goals which you set out for yourself were hard to achieve. They were hard to accomplish. However, it didn't take as much effort as you thought it would take, or maybe even not as much time as you thought it would take. And then you realize that your goals weren't big enough. You were thinking too small. And before I turn this into even a longer rant, yes, think about the people that you're surrounded by right now. If you're right now surrounded by people that are just going about their day-to-day life, they're like living a very average lifestyle, they're working average jobs, like, do you expect that all of a sudden you're going to be the exception to that rule of people that you're surrounded by? Of course. You might think to yourself, yes, I'm going to be that one. But if you're honest with yourself, you're literally a result of the people that you surround yourself by. And that right there is, in my opinion, what sets these very good traders apart from the traders that are average or that are not profitable at all. What sets very good traders apart from the remainder is the fact that they surround themselves by the right individuals. Because when they surround themselves by the right individuals, what happens is that they're forced to level up. Look at every single big entrepreneur out there. What you see is that they have networks that they always utilize. They always surround themselves by winners. Because if you're surrounded by winners, you're going to be the next winner. It's as simple as that. But if you're surrounded by losers, what are you going to be? You're going to be the next loser. So begin to surround yourself by the right individuals. Because when you surround yourself by those types of people, watch your growth take place. And then you will realize what's actually possible within this industry. Because trading is the true vehicle to freedom. You might not realize it just yet, but what I've just outlined to you is going to be at the foundation of your whole growth journey if you decide to commit to this. I apologize for all of the ranting which I've done throughout this lecture, but there were a lot of things on my heart which I wanted to share with you. If you enjoyed this lecture and you found valuable insights from it, please let me know in comments, and be sure to subscribe as well if you would like to see more lectures like these. It's amazing to see how low the percentage of people is that actually are subscribed to my channel but still watch my videos. Would really appreciate it if you would press the subscribe button. I want to wish you a lot of good luck in your studies, and I look forward to speaking to you soon again, because there's a lot more content coming. And I hope that you're ready, because I've set out to make a major impact over this upcoming year on a lot of traders' their lives, and this is just the beginning. It's already beginning to show, you're already beginning to see a lot of traders actually just utilize my concepts, and it's only going to get more and more and more. And I hope that you're ready for the ride. Be safe, and look forward to speaking to you soon again.